Now, before going any further with this, I want to talk about the nature of fractional reserve banking. It's often said that fractional reserve banking creates wealth from thin air. This really isn't strictly true, and it's not really possible. I think it was just a remark that somebody made as a joke, and it got carried on to reality. Promises do exist in reality, and these are promissory notes that we're passing around. Under fractional reserve banking, a bank operates with a reserve ratio. And for the purposes of the following example, we'll assume that the reserve ratio is 10%. This means that if I deposit money into a bank, the bank has to keep 10% of what I deposit, and they can lend out the remaining 90%. Does not mean that they can create wealth from thin air, as the following will illustrate. If I deposit $100, the bank may lend out $90 and must hold on to $10 as a reserve. Even if the bank has lent out $90 of my money, I can still walk in and take back my full deposit. If everyone does this, there's a run on the banks. If few people do this, everything works fine. That $90 inevitably gets deposited in a bank. It could be received as a payment from the one who borrowed it. It sits in a bank account somewhere, of which 10% is held. The rest, $81, gets lent out again. The pattern continues and continues until the banks have nearly $1,000 lent out on that $100 I deposited. The bank is paying interest on the savings accounts of $1,000 because it is holding all that money in accounts. It maintains the promise to all of the depositors, and that way the money is created from promise and responsibility on the part of the bank. Fractional reserve banking has the effect of lowering interest rates. If the bank actually had to have the money that it lent you, interest rates would be around 30%. There'd be no upward mobility in the classes, and one could not borrow money to start a business or change his material well-being or improve his material well-being in society. Interest rates of 30% create stationary classes with little or no upward mobility within a society. Whether or not money should be lent at interest is another topic. I'm talking about what is and not necessarily what should be. Christian law states that usury is a sin. And Michael Hoffman explains usury in a video called Michael Hoffman Talks About Usury on YouTube. It's about 20 minutes long, and it's a really good video. Usury may be at the root of our problems, and Hoffman makes an excellent case for this in the 20-minute presentation. This particular instance of usury, which I describe above, is not central to the corruption of the monetary system that's turned our elected representatives into whores. In the case of consumer side banking, the private side, fractional reserve banking is good for the economy, whether you agree with it ethically or not. It adds value to the consumer society. The money being passed around while backed by a promise from the bank does have a substantive value, the labor that backs it up. If people stopped working for it, it would become worthless.